Hello everyone. In continuation of our previous video where I gave you the logic behind some of the items and the method to solve the effect of transactions on asset, liability and equity items, which is also known as accounting equation. So in every question you have to first find out what all items are there in the asset. You write it in your rough paper and you mention the accounts involved, so it will be easier for you to analyze all the transactions. So in case of problem number 2.6, there are four assets recognized and we again have liability and equity over here. So I have given this solution. So the first transaction is really easy. Cash is being invested in the business, so cash is increasing by 20,000 and equity is increasing by 20,000. Second transaction, bought equipment for cash, rupees 12,000. So 12,000 will be reduced from cash as cash is going out, you're paying it out of your pocket, and we have equipment to be increased by 12,000 because equipment is now placed in your business, and there will be no impact on liability and equity. Third transaction, paid rent deposit for office. Remember an important point, rent deposit and rent are two different things. Rent deposit is an asset whereas rent is an expense. So in case of rent deposit, you will create an asset account called rent deposit. So in this case, you have created an asset rent deposit for rupees 5,000, and for this you have paid cash rupees 5,000. So cash will be reduced by 5,000 and rent deposit will be increased by 5,000. There will be no impact on liability and equity. Fourth transaction, provided services for cash rupees 90,000. That is, you made sales for in cash rupees 19,000. So here we'll have cash inflated by rupees 19,000 and equity increased by rupees 19,000. There might be some questions in your mind that why are we adding that 19,000 rupees in equity. If you remember our income statement chapter, like I similarly explained in our last video, here you are adding all the revenues and you are deducting all the expenses. So if you imagine an income statement where there is no expenses at all, so your sales amount will be equal to net profit, right? So that is the logic behind adding all the revenue items in equity and deducting all expenses from equity. So again we have made credit sales for rupees 14,000. So as we have not received cash yet, so we'll use the accounts receivable in this place. Accounts receivable is also known as trade receivable and debtor. So it will be inflated by 14,000 rupees and our equity will also increase by 14,000 rupees. Paid salaries rupees 8,000. Cash will be reduced by 8,000 and equity will be reduced by 8,000 as it is impacting the retained earning, right? It will reduce your profit. Then we have collected payments for past invoices rupees 8,500. Past invoices, it is referring to the accounts receivable account. So the people who were indebted to us and they were supposed to pay us 14,000, they have paid now 8,500. So we'll reduce their liability by 8,500, right? So our asset will decrease by 8,500, that is trade receivable column. And again we have received in cash, so 8,500 will be added in cash. There will be no impact on liability and equity. Number H, receive advance payment for services. Somebody has paid you cash rupees 2,000 in advance, that is you have not provided them services or goods yet. So obviously our cash will be increased by 2,000. But what is the second effect? That is every entry has two effects, right? So asset is increasing by 2,000. We can show it in the liability, right? We have not given services to someone, we are liable to provide our services, so we will show this transaction in our liability column. 2,000 rupees is added in the liability column. And the last transaction, paid rent rupees 500. I have told you in the last video, where the word paid is given or received is given, you have to show its impact in the cash column. So paid 500 rupees, so cash will be deducted by 500 rupees, and again we have its impact on equity, right? The retained earning will go down, so 500 rupees will be deducted from equity. Now as we know, in our accounting equation, assets is equal to liability plus equity. I have made the totals. The asset side total is 46,500, and similarly we got the liability plus equity also 46,500. So this is the answer for question number 2.6. We have got the final solution. See you in the next video. Take care.